Hey guys, thanks for joining me on today's podcast. It's September 25th. It's Wednesday, and stock market continues to meander and actually go down. Today was the fifth day in a row that we've gone down. And I think, if I saw this correct today, this is the last time it was down 5 days in a row without going down very much, because it hasn't been that big of a drop, was like 2004 or something. So this, to me, I would say, if I could sum it up, this would be what never short a dull market looks like, right? This is a dull market. This is a market that's not, there's not a lot of intensity to the downside. There was one big down day, which was Friday, I believe. And then since then, we've just been drifting lower. And, it kind of feels like we're at this inflection point, right, where we had the Fed obviously saying they weren't going to taper right away, and the stock market reacted. And I put out on Twitter, and I think I even did a podcast that day talking about, I think it was this day right here, talking about the fact that I expected the market to fade that day, because while I thought it was good for the bond market, I thought the stock market would sell off because of the uncertainty surrounding it. And it didn't. It stayed up most of the day. But the fade came after the fact, opened up a little higher the next day, and then we just continued to fall. So, where are we at this point? I think now we still have uncertainty, right? Are they going to taper in December? That seems to be the consensus is building that that's when they're going to do it. And they've said it's data dependent. But a lot of people believe that, they had a free pass to do it. The market was priced for it, and they didn't do it. And so now it's kind of like, well, when are they going to do it? So now, as opposed to having more certainty, we're back to the guessing game of when they're going to taper. And you add to that the budget battle coming up, the fiscal cliff, or I shouldn't say the fiscal cliff, that was back in December. Well, maybe a fiscal cliff, but this budget battle that that's coming upon us, potential government shutdown, all that stuff is worrisome again. But the stock market still seems to be taking it in stride. And so while there may be some uncertainty, it is just drifting lower. We don't have the real intensity. So how far could we go? Well, I think a lot of it will be news driven over the next few days and potential weeks. But look, this has to be right now, you're kind of line in the sand. We've zigged to the 100-day, and that's what this purple line is. It's a 100-day moving average. And now, are we going to drift back down somewhere around, 1660 or something if you extend this out, and then bounce and go higher? We don't know yet, but we do know so far this pullback right here has been very weak. And when I say weak, that's actually a good thing. I don't mean weak meaning the stock market's been weak. I mean the intensity of the downdraft has been weak. There hasn't been a lot of conviction. It's been more a function of let's pause, let's wait and see. And you can see it because you have plenty of things that are up on these days, right? Gold is up today. Insurance stocks, bank stocks, oil and gas stocks did just fine. Even mid caps were up on the day. So you don't have this real intense selling, but you do have interest rates falling. So interest rates falling tells us that there's a little bit of uncertainty. And 3% for right now seems to be the ceiling. I mean, if you're looking at this and it's a stock chart, you're saying, I need to get out of this thing, right? Because it did this, then it started, and now it's starting to roll over. It could find a home at maybe 2.5, and I think that would be kind of a logical spot, which is kind of this area right in here. So I think that makes sense, 2.5. You would see the convergence of the 100-day moving average. A lot of things line up for 2.5%. So that may be my short-term target for where rates were going if you were trading that. And as I mentioned on the podcast on the day that the Fed did not taper, the things that were getting beat up that were very interest rate sensitive, municipal bonds, some REITs, those things, some of those things, even though they're light, I kept some of those things because I kind of felt as if rates were going to reach some sort of ceiling simply because I don't know how much the economy could take of rates going straight up to the moon. And so again, I didn't load the boat on interest rate sensitive items when it was at 3%, but there's some things I'm really glad I did not sell either. So it's a balance. But right now, rates are coming down, which shows there's a little bit of risk off, money moving out of stocks into bonds. And that's something that could be temporary, but we're seeing some, home data that's still okay. And overall, though, the market is definitely, or investors are definitely waiting to see what happens with the budget battle and so forth. Okay, so let's take a look at Apple. I'll zoom out a little bit. What's going on here? Apple, of course, came out with their new iPhone, and you remember the day that they released the notes, or basically released the iPhone, and the stock went way down because it didn't thrill anybody. They thought the 5C, the cheaper version, wasn't cheap enough, and they wanted that to be cheap so a lot of people, they could penetrate the lower end phone market. So the stock dropped. Well, then over the weekend, the new phone came out. Sales were tremendous. I was in Carmel, California over the weekend, and for an extended weekend, which was unbelievable, gorgeous. Got to play Pebble Beach. If you want to see some of those pics, go onto the Facebook and you'll see some of those pictures, which were just look like something out of a, it looked like pictures that I didn't take with my iPhone. Let's put it that way. It was so gorgeous. But the thing was, I went in I had a problem with my old iPhone camera. And so I wanted the new iPhone. I knew I was going to upgrade because I wanted some nice pictures of Pebble Beach. So I went the morning of, or the afternoon of Friday, which was the day it came out, and I went to the Apple store in Carmel, and they said, we're sold out. Now, there wasn't a line out the door. I didn't get there that morning or anything. It was later that afternoon. There wasn't a line out the door, but it was very crowded. The guy said, we're out of them. I said, okay. So went over to the AT&T store, right down the couple stores over. Pretty crowded in there, and the guy said, we're out of them. He said, you know what? I have one 64 gig black left. I said, that's the one I was looking for anyways. He said, great. So about 20 minutes later, I had my phone. So I will say this about this phone. And by the way, I was upgrading from an iPhone 4, if you're familiar with the different models. But this phone is super fast. That's the thing that I noticed most about it, is obviously getting the new operating system. If you've already upgraded, you've seen the changes. Won't talk about that, which were some good changes, a lot of good changes. But the main thing about this phone is, number one, it's very, very fast. I mean, it is ridiculously fast. And on top of that, the camera is unbelievable. So I, have been very, very pleased with it. So I really like it. I would say, why is the stock not reacting more favorably? It obviously jumped up once the news came out that, hey, sales are at a record. Why is it not going up? I think partially, remember, it had a 10% move from let's call it 450 up to almost 500 or so. It had a 10% move, and now it's kind of settling back in again. So I would look for it somewhere around the 475 range, maybe one more down day like today before it bounced again. But could it be that the 5C that everybody was worried about not being cheap enough, maybe the price was high enough to where people said, you know what, if I'm going to pay this for a 5C, I might as well jump to the 5S, the more expensive one. I don't know. I mean, the 5C doesn't have the fingerprint technology, doesn't have the chip in it, and the fingerprint technology is pretty slick. It works very well. It's very easy. You can use it for purchases. So, and not only that, something is really interesting with this phone, and maybe some of you with 5s can correct me if this was already in the previous version, but when you talk on it, it's almost like taking one of those conch shells and sticking it up to your ear, where you kind of have this hollowy vacuum feeling, which makes the conversation, it's very clear. So not only just functioning, but some of the technology with how the phone works from a phone perspective, which we sometimes lose sight of, is very well done. So I've been very pleased with it. Couldn't be happier with it. Again, is it as slick and cool as some of the Android phones? Probably not. But to be honest, I'm stuck in the Apple ecosystem, and after buying this particular phone, I'm okay with that because it's a nice phone. So anyways, the stock itself, look, the bottom line is there's a battle going on. Some people are downgrading it, some people are upgrading it, some people are upgrading the estimates. I think the stock's going to be fine. I'm still holding it, and look, it's as I've mentioned before ad nauseum, it's a different company, a different stock now, but the bottom line is they're still selling stuff, and I think they're going to come out with more products before Christmas, and they're going to sell more stuff. And when I talk to people at the Apple Store or the AT&T store for a little more non-biased answer, they said there was just as much buzz for this one in the store as any of the previous versions. So, Apple may have lost a step, but they still have enough of a step to be profitable and obviously have the stock go back up. So will it get to 700 and be a Tesla by the end of the year? No. But will it eventually get to 700? Yes. Just keep on selling stuff, keep on making billions of cash, and they'll get there. But just have different expectations for it than you did in previous years. So I wanted to go through a couple of emails I got. One was from somebody who is consults banks and has been in banking for a number of years. And basically, we were exchanging emails back and forth, and I'd asked him some questions about the banking industry and told him kind of my views and what's going on. And he said the banks would love to lend out all these excess funds they have, but he said there's just not enough demand. And he said, there's little demand now, whereas 6 months ago there was no demand. So there's some marginal improvement. And he said small business customers really are afraid to spend any money or expand their businesses in an aggressive way because of the clouds on the economic and political horizon. And that's kind of what I see. I will say, a lot of CEOs I talk to are still seeing a lot of, business has been pretty good, number one. Number two, for those that are looking to sell, there have a lot of interest from private equity groups, and I know a lot of people looking to acquire. So there's a lot of activity going on. Again, I would say it's the non-published business. It's the business of non-publicly traded companies, the small caps, the just smaller family-owned businesses seem to be doing really well right now. And maybe those are the ones that don't need the capital, and so maybe this bank guy doesn't necessarily see all of that. But there's no question, if you ask people what are they concerned about right now, it's not necessarily just about the economy. What they're concerned about is just what he alluded to, the political horizon. They're concerned about Obamacare and the ramifications and the costs of that. That's what they're concerned about. They're not concerned about selling widgets as much as they are about how profitable their business is going to be because of Obamacare and obviously because of what's happening with the budget battle. One other thing is he says, in addition to the absence of demand, there are growing restrictions from Dodd-Frank. And a lot of banks don't have the software to essentially do home mortgages because the software, or basically Dodd-Frank's having a lot of requirements that the software just can't do. So a lot of community banks are basically just getting out of the mortgage business because the cost of compliance and regulations is too high. So anyways, that's just some insight from somebody who's very, very familiar and has a lot of experience in the banking sector. Here's another a question, somebody basically asking about interest rates, saying, looks like he said, I mentioned in the past I thought 3% was going to be a top, and it looks like it's turning out that way. I wanted to know if last Wednesday's move was just short covering, and I've already covered that. While it wasn't short cover, well, there was definitely some short covering when the Fed said that they weren't going to taper. It's definitely short covering. But again, I thought the market would fade based on some fear of, what was the Fed seeing? Are they seeing something that we're not seeing type of thing? And sure enough, we are getting a little bit of a fade right now. And the same person asked, you mentioned several friends who own businesses. How are they being impacted by this rollout of Obamacare? Again, just covered that. Obamacare is the number one topic right now. The number one topic. And this guy says, hey, I've had a 15% increase in my premium payments. And look, I've had 21% increase, and I know several institutions that are having anywhere from 30 to 60% increases. And so, because you don't know all the ramifications just yet, it makes planning very difficult. This is when people are doing budgets for next year, makes it very difficult to plan. So that's my biggest issue, is the uncertainty there. So you have uncertainty about Obamacare, uncertainty about this budget battle coming in the next few days, next few weeks. And then now we add to that something that could have been off the table of tapering, and now we have the uncertainty of tapering. And So we have all this uncertainty, and you can see the stock market is certainly acting as if there is some concern. And so again, we're getting the zig and the zag here, and we've gone up to the high. We're coming back down. First was the 50-day moving average, then it's the 100. We'll see if this turns into something more significant. You are seeing a lot of complacency. There's a lot of when you look at things like how much money is sitting in money market funds, it's been going down, pretty substantially to where this is generally where you get some sort of correction. But again, nothing suggests that this is the end, that this is it. Nothing suggests that. A lot of people suggested that here. I heard a lot of people say this is the high for the year. And now you'll probably hear people say this is the high for the year. And they'll just keep saying that as we move higher. So I think we're going to go higher. But be careful. Kind of use your cash to gain some alpha when the market's down. Take advantage of it. But as I always say, I mean, definitely keep your exit strategies in, because as we saw in 2011, the last time we kind of had some of this stuff going on, the stock market sold off very fast within just a few days. And if you don't recall that, take a look here. This was the summer of 11. And within 3 weeks, we went to the S&P was around 1350, and within 1, 2, 3 weeks, we were down at 1104. A very big drop, very quickly, and eventually went lower. And we were going back and forth. And then in November, we finally found a bottom. But that was a really scary time that not a lot of people. I don't think a lot of people remember that. They remember our debt being downgraded, but this was a very scary time. And the reason why was, we had very high amounts of volume. We had very quick moves with really no warning at all, and that was what was scary. So be prepared, because look, you can see here we were zigging and zagging, and then we went down a little deeper and made a lower high, and then that was it. So here we are today. Could we go down, go up, go down a little bit, come back, not make a lower high, and then fall off again? It's certainly possible, but I think these are all contained within corrections. It's just how much of a correction are you willing to put up with? What's your tolerance? Your pain threshold? Where is it? Is it here? Is it here? Are you willing to write it down to here? Everybody's different, okay? And I have been somebody who generally has erred on the side of being more cautious than not. And I certainly don't want to swing the other direction, but you have to take the big picture into consideration and where the market is. This is a old bull market. It's not fresh. It's not like this is 2009, right? We're 4 years into this run. But again, you have to see some evidence that things are rolling over. And so far, we haven't seen that evidence yet. So I could see a correction coming, even a more significant one than we've had recently, even sub 1600, let's say, on the S&P 500. Which would, again, just looking at this chart, here's 1600 right here. Could we go down to that? Absolutely. I mean, we haven't really had that since 2012. And that's, we're certainly due for that. So we could do that, but again, you have to position yourself. What are you going to do when it gets to that level? You're going to have the powder dry to take advantage of it. Are you benefiting from rates falling? Are you benefiting when rates rise at times? Are you taking advantage of the dips? Are you taking profits on things? I mean, those are all things you have to consider every day, because yes, there's going to be some more violent moves than we've had in 2013. Remember, this right here is the start of 2013, and you look at this has been a pretty smooth ride so far. There's no doubt it can get more violent at times. All right, guys, that's all I've got for today. Keep the questions coming, and don't forget to look at us on Facebook, Twitter, Google+, iTunes, eggerscapital.com. We're on all those places. So have a wonderful day, and we will talk to you soon.